Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
if you're talking about closing your eyes and buying at that point, you have to look and see whether or not 15, 16 times P is in play already. That's what, 7.2 to 7.4, somewhere there. So you're basically closing your eyes and buying at that point, right? But you have to understand that that's another
Malayo pa.
6 to 800 points down, right? That's another 10% in the market.
Call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Welcome, guys, to episode 10 of Short Stops. After today's bloodbath, I'm here today with Vice President of Citisecurities, Mr. Lawrence Lee.
I am here. Hi, guys.
Welcome, my dear brother.
Finally, I've been invited. Thanks for the invitation.
Okay, so how long have you been trading, or how long have you been in the markets?
So I've been in the market since I was 16. So I'm 36 this year. That makes 20 years.
You've been a big advocate of trading and especially of technical analysis. What's your philosophy on all of this?
Citisecurities has historically been built around technical analysis. And technical analysis is really the study of market behavior. So people make the same mistakes over and over again over time. And what has to happen is that you have to be able to see whether or not there are patterns in those things and see if you can be able to take advantage of it if you've seen it before. These are the inefficiencies that you're looking for.
Yeah, and if you look at inefficiencies, especially in emerging markets such as the Philippines, I think they become more attractive to most people. And that's why people prefer looking at technical analysis more than fundamental analysis, I assume.
Yeah. The reason why they actually want to do that is because it's really the ability of instant gratification. The thing with fundamentals is that you have to do a lot of homework. You have to go back and do a lot of calculations and valuations and whatnot, right? And sometimes those things don't really materialize. Whereas in the short term, if you're looking at it in a sense where you can actually make a decision today because of your technical analysis, then you can take advantage of it, and then share prices actually realize themselves in the next 2 to 3 days. At the same time, trabahong tamad talaga ang technical analysis.
But it's funny how you mention it. I mean, 3 weeks ago, most of the stocks that were high-flying, you've seen your PXP, Haven, Now, MRC. In the last 2 weeks, it's changed like 180 degrees. Now, these things are the ones breaking down. We've seen a lot of Facebook and a lot of posts going by na, oh, buy the dips or bounce plays or whatsoever. What do you think is happening right now?
The biggest problem today is that a lot of people made a lot of money in. So what happens is that since these people have made so much money in such a short period of time, everyone's just looking for a new place to put their money. So they'll start liquidating now, they'll start liquidating their Haven, and now they'll try to see whether or not there are some other issues that they can push, whatever it may be. So it can be those ones that have gone up a little bit but didn't really make a lot of money. So guys like Vulcan, MRC, or guys that they tried to push, like the Gatchalian issues, Waterfront and Wellex, that didn't really materialize because the sell-off came within the same day. All these surges and the outcome of these surges are so much smaller today, and they're not actually getting, naiipit sila, they're getting caught and not being able to liquidate these issues because liquidity is not there. What's happening is that a lot of these guys are just selling it at any price now. So it takes a lot of money to be able to support share prices at those levels. Eventually, these things are going to come down. So it's just a matter of supply and demand, and now excess supply is in place. People are now getting scared, and then at certain levels, you can't take it anymore. Some guys in now were bought at 18, 19 pesos. Were basically selling it earlier this afternoon at what, $7.50, $8.
Is this a different psychology that's coming through? I mean, when people are making money, different psychology. Now when people are losing 40, 50%, I assume it's also a different psychology.
Oh, no question. We always say that people are more reckless or more aggressive when they're making money because they have what they so-called a buffer, right? So just like when you go to a casino, if you're in a winning streak, you're willing to bet more because you think you can afford to lose that money because it's not hard-earned money. And at the end of the day, it's It's the same way in the casino. So when you leave with nothing. And it's what's worse in the market is that it's not just you don't go home with anything. You end up going home in the red, right? So you end up losing money because of all this speculation. The worst part about it is the habit that is being built. If you look at it in that sense, is that if you make money in one now or you make money in one haven, what happens there is that you feel like that's the real way to make money. And the now and the haven is your anomalies, right? That's the exception to the rule. And now you're trying to see if you can do it on the other succeeding issues. And obviously not every single issue is going to move like now and haven. That's going to give you 5-6 times your money in such a short period of time. What's going to happen is that you're going to try to speculate. These guys are going to get pushed. The insider is going to see it, and they're going to start dumping shares on you. And all of a sudden, the move that you expected isn't going to materialize. It's a huge wake-up call for everyone. I think that the saddest part about all of this is that this isn't going to be the last time it's going to happen, because human beings are very weak in that manner, right? Everyone's looking for a jackpot.
Correct. You talked about habits. You talked about being able to replicate these stuff, and I assume the underlying concept behind all this is people need to have a system that they can work on. In your case, what kind of system are you looking at?
I think technical analysis in general is really being able to build a trading system that suits you. So a lot of people come to us and ask us questions about whether this indicator or that indicator works, right? And we always say that if you are making money in the indicator that you use, I see no reason for you to have consistently. If you consistently make money on the trading system that you built for yourself, regardless of whether it's what we use, I absolutely believe that it's what you should continue to use. The problem today is that a lot of people, when talking about technical analysis, is that they're giving a specific indicator and then they don't bother to realize why it works. It's just, okay, this is what I read from the book. Okay, let's just do it and let's use it and we'll just figure out how it works. The problem there is that you don't understand why it works.
But the challenge there is making sure that you have a good understanding of the indicators in general, right? So sometimes if you're making money now, maybe it could just be market conditions or whatsoever. So you have to make sure your indicators work in all different kinds of environment, I assume, right?
Yeah, no question.
I mean, given the amount of indicators that we have, right, what are the most common ones?
The most common ones is anything that has to do with price. So anything that has to do with price is moving averages, MACD, those two primarily because those are based on average prices. And then you have ones like RSI, stochastics, Bollinger Bands, and Fibonacci, which is incredibly popular as well. A lot of these indicators are very popular because there's a lot of historical evidence of these guys working already. So the nice thing about it is that a lot of people have been able to make the mistakes for you, so that since you've already seen the results of these guys historically, you don't have to make those same mistakes again.
But for you personally, what indicators do you mostly rely on?
The best traders in the world only use 2 indicators: volume and price. So me, the primary indicator that I really use is moving averages and MACD. Everything is based around price. There's other indicators that we use to supplement, guys like ADX. So ADX is found under the DMI directional movement indicator. And those are used to be able to see irrationalities in markets. So whether or not underlying momentum is in place. And everything else is just a factor of those. I really am a big advocate of understanding price and how things in price can be replicated over time. It's not like if this indicator is showing you something, I have to buy. If this indicator is showing you something, it's a sell. I don't see it in that way. A lot of the things I do is just magnitude and duration, which is just basically price. It doesn't even have to have an indicator. It's looking at overbought, oversold situations. It's something that can be replicated very easily. And it's not something that you're trying to be able to find the anomaly. So there are a lot of situations where you're looking for a specific formation, whether it's a cup and handle or whether it's a VCP or whatever it is. The problem with that is that they're so rare. And if you're looking for an indicator that's so rare, Even if you go through thousands of charts every single day, you might not find one. But magnitude duration, every day there is something.
Okay. Bringing back everything to the present situation, what do you see now in the market? I mean, we had a huge drop today. I mean,
Yeah.
market's been down, over 1,000 points since January. And so, on technical analysis, what do you see in these types of environment?
So the PSEi broke the 200-day exponential moving average last Thursday. And that's a huge sign of weakness, because when you talk about moving averages is just the average price of the market over a period of time. So 200 days is what we use for the last year. And what's happened is that if you're talking about the index coming from 9,000 and breaking below the average price, so you're talking about people who are making over 15% in the market and now are basically losing money today.
How is behavior now different today?
When you're talking about having a buffer, so if you're up by 15%, you feel you can lose that 15%, and you're going to take the excess amount of risk to try to make more. The greed in each individual is evident. Whereas today, where people have lost that buffer, now people have to be a lot more cautious. Not even a little more cautious, significantly more cautious at this point. Everyone's playing defense, and the best defense is just to sell outright. And that's where irrationalities happen, because up to a certain point, you can't take that amount of loss anymore. You can't sleep at night. You have to sell your position because it bothers you so much. You can't concentrate at work anymore. It's so difficult at that point in time. And I mean, I've gone through it, and I've seen those kind of situations where I just can't handle the loss anymore, and you have to eat it. So you'll sell it at those points, and then prices will go up already.
I mean, so the question at the end of the day is, pwede na ba? Pwede na ba ngayon? I mean, it's gone
if
down
you're-
1,000 points.
If you're asking me, pwede na ba ngayon, we always say that at the top of markets, you have to trade what you see, and at the bottom of the markets, you got to trade what you think. So those are two completely different scenarios. At the top of markets, when we say trade what you see, that means that you're basically using your technical analysis to guide you and to see whether or not you can make more in terms of the underlying irrationality of momentum going higher. When you say trade what you think at the bottom, it means that technical analysis is not going to save you at this point, because there's no consistency when markets become irrational. The only indicator that we use in terms of technical analysis when you have prices breaking below 200-day is really ADX. Because ADX is a measure of the degree of momentum in a specific issue. So if the moment that ADX goes above 60, it means that markets are incredibly irrational already at that point. And those are times where we have to start thinking whether or not we should be looking to buy. And then when we say trade what we think, it means that we have to look at the underlying fundamentals. What is it that we're actually buying? Is there any systemic risk moving forward? So at this stage, as of today, we don't really see any significant systemic risk in the market. We see problems, speed bumps in the market, such as the peso devaluing, and the possibility that we're not going to be raising the Philippines isn't going to raise rates alongside the U.S. So you're going to have huge amounts of net foreign selling coming into the market. So understanding that, it means that there's probably going to be some more downside moving forward. What happens now is, okay, we have to compare to the past. So from 2009 to 2012, you're looking at historical PEs of 14, 15 times PE at that point. Over the past 3 to 4 years, those PEs have gone to 18, 19 times. So now at these stages, if you're talking about closing your eyes and buying at that point, you have to look and see whether or not 15, 16 times PE is in play already. That's what, 7.2 to 7.4, somewhere there. So you're basically closing your eyes and buying at that point, right? But you have to understand that that's another
Malayo pa.
6 to 800 points down, right? That's another 10% in the market. The last time the interest rate spiked the way it did, the market went down by 20%. The time previous to that, which was what we call taper tantrum, the market went down by 25%. So we're only 10% down at this stage. So if you're talking about
it feels like a lot already.
It feels like a lot already. So if you're talking about picking share prices up at this stage, I think we have to hold off on that until the irrational liquidation is done.
You talked about how you're looking for ADX above 50 for irrationality. But I assume not all irrationality is the same.
Yeah.
Some irrationality could be rational. It's just that you're having huge just panic selling, but there could be underlying problems with the fundamentals.
Yes. So that's another reason why we have to say trade what you think. Because if you're just basing it on technical analysis, sometimes you're buying stocks that have technical that
could be oversold.
That could be oversold in the short term, but have fundamental problems. That's not what you want to be buying. You want to be buying great companies that are being sold off because of irrationalities. So you have to look at the underlying fundamentals of all of these companies that are being sold off. An example would be maybe the banks. So if the banks are going to be sold off in the short term and you have irrational selling in your BDOs and your BPIs, those are the ones that you really want to be looking at. Guys with recurring income, those are the ones that you really have to prioritize. So maybe the mall operators are something that you might want to be looking at as well if there's irrational liquidation there. If you're looking for guys that have problematic fundamentals and you're buying those, or even worse is that you're buying the irrational sell-offs of all of these penny stocks that are being thrown around, you're basically asking to lose money at that point, right?
Suicide.
That's suicide.
So 7.2, I assume, is around 15, 16 times, and that's around the level you're looking at?
Yep. That's still a long way to go, though.
Okay, still a long way to go.
Because 7.2 is 20% down from 9,000.
That's correct.
So that's the first level of basically closing your eyes and digging deep for value at that point.
Okay. Do you have preferred stock picks? I know you mentioned about BDO and the banks and recurring income stocks like malls.
I like the consumer stocks, and I hope that even after the sell-off, the consumer stocks will be holding. So we always say that if you're looking for the needle in the haystack, it's always easier to find it when the whole barn is on fire. So what that means is that if the whole market is collapsing, the easiest ones to find are the ones that didn't collapse, right? So those are the ones you really have to prioritize. And I'm hoping that those consumer stocks that we really like, whether it's Pizza or Wilcon, those are the guys that I'm really heavily prioritizing. And hopefully that the sell-off doesn't damage them too much. That's one of the things we're looking at. And the other thing that we're looking at is the casino operators, because there's a lot of buzz in the casino operators over the past few months, especially with the inflows of the mainlanders. So Bloom has been one of the strongest stocks on the board. So the whole market's coming down. Bloom hasn't even gone down much. MRP is much cheaper than Bloom, but it's not as strong as Bloom. So that's something that you also might want to look at because it's significantly cheaper, and I think that they're positively affected by all these mainland Chinese coming in and playing. LR all got an approval the other day, so there was a huge buzz on LR over the past week to build their casino in Boracay. And then Gokongwei got approval to build their one in Cebu. So today it's hot because the inflow of all these mainlanders is in play. Whether that's sustainable or not, that's another story altogether, right?
What about the big caps? I mean, we've seen Ayala Corp drop today significantly with the secondary plays out. Are these also on your radar?
If it becomes cheaper at this point, because I think that in the short term you're going to see an overhang with Ayala Corp. But I think that what happens is that if the whole market comes down, these guys definitely have to also be in play. There's no question that whenever the only time that we really prioritize picking bottoms is when the whole market is also at the bottom. So if the whole market's collapsing, we don't have a problem buying reversals. The last thing you want is to be buying a reversal when the market is incredibly strong. That's not what you want. But if the market is coming down significantly, the big caps are the ones that you really have to also heavily prioritize because those will move in tandem with the market. So guys like Ayala Corp, guys like SM, guys like GT, maybe JGS. I would have a problem buying the big caps if the big caps were at the bottom and the whole market's at the top. Then you have a problem. Maybe there's a fundamental problem in those big caps, right? So like GT had an overhang last year. The whole market went up. GT didn't go up because of the overhang with the tax reform, right?
All right, fantastic. thank you, Lawrence, for being on the show.
Thank you for having me. I'm so excited. I'm finally here.
And there you guys have it. Once again, we're here to make you guys feel comfortable, feel secure. Don't worry about this too much. We still have another 800 points to go.
Good luck, guys. Stay light.
Have a great weekend,
All
guys.
right. Have a good week. Be good.